This is Kerry Artak with Artak Advisory, and this is the AgriTalk video supplement for the week of, actually, the show for Monday, November 30th. I'm covering the same three markets I covered the previous week because I think they're the most relevant, and that would be March corn, January soybeans, and February live cattle. Before I jump into the charts, just want to remind you that I do offer a 2-week free trial. Go to artakadvisory.com. If you're not there already, you probably are because you're watching this video. But just tell your trader, investor, producer, friends about my services if you would. Go to the AgriTalk video link at the top of the page. Click on it and scroll to the bottom past all the videos where you get to the free trial form. Click on that free trial form. Give me your first, last name, your email address, phone number, and a message if you like. Tell me a little bit about yourself, and I'll get you, all that I produce on a daily basis for 2 full weeks. No questions asked. I do offer a 2-week free trial to anyone, even if you've been a free trial person before, but you've not had one in the last 6 months. I'll give you another one. I'll also call you up and can consult with you if you like about your trading needs and any recommendations you need. We can talk about what you're doing, so forth and so on. So let's jump into today's analysis. A lot of repeat here, actually. I think maybe I was just sort of cut a few corners when I did this analysis today because I thought let's just continue with what we have because it's actually quite easy. The numbers change ever so slightly. So this is the broader corn futures market. This is a monthly continuation chart based on volume rollover. And so it reflects the March contract right now. If you've been listening to the show, you know that in September I had a buy signal above this long-term channel bottom that is presently at 367.25 for the entire month of December. It is our floor of support into next spring, and above which, as I've been saying for the last couple of months, the 465.25 formation is likely between now and spring trade. We actually might get up there sooner than that, and I'll show you why in a moment. But this is sort of the big picture, working our way long-term into near-term. Now, this is near-term. I don't know if we're going to test this or not. This trend-defining ascending 1/3 speed line, this is a weekly chart, by the way, also volume rollover, reflects the March contract. It shows solid support at 396.25 that if tested between now and the end of December can actually absorb selling into later winter. And in fact, above which, that 465.25 target that's expected into spring is likely to be realized between now and the end of January, so long as we continue holding above 396.25. Along the way, I mentioned in last week's show, this is the March contract. This is a weekly chart of the March contract only, back to its point of origin. And you can see we did actually close last week above the 433 even high from the summer of 2019, but it was by a very narrow margin. I'm not putting a lot of weight into that, but nonetheless, we did close below it. So we actually might get to 465.25, which is really where this pencil is right now, right in that area. We could get up there by the end of December, perhaps. Let's just put it this way. If we've got some highs here at 435.75. If we close above the 435.75 high, I'm just mentioning this verbally, I don't have it written anywhere, but if we close above 435.75 at the end of this week, that in itself would add emphasis to the possibility that by the end of December we could actually reach that 465.25 long-term resistance area. I will say that if we close any week above 465.25 between now and, say, spring, when this is actually expected, I do see a significant buy signal that should play out through spring and into summer trade. I have the 650s as our next long-term target that I think could be realized in as little, 3 to 5 months is possible. It's likely it'll take into July, summer trade, 6-8 months or so of trade to actually reach that upper area, but we're not there yet. Downside, I'll just leave you with this. I don't see it happening, but if we close the week below 396 and a quarter, a good high has been placed through the rest of the year, and we should, over the next 3 to 5 weeks, couple of months, fall back into this zone of support that begins once again at 367 and a quarter and ends at this speed line at 352.5, and this speed line rises into the 360s by later January. That's what all I'm going to say about corn. Let's move on to soybeans. I'm going to show you one chart and one chart only for soybeans. And I'm going to backtrack just a little bit here. You can see in late August we had a long-term buy signal above this formation that at the time I'd indicated this 1139.5 channel top as a likely 3 to 5 month objective. It took about, I'm not going to count here, what was this? Late July, September, October, yeah, it took every bit of 2 months. We got up there and we didn't spend much time. We settled right above it. So now we are in secondary buy signal mode above 1139.5, now expecting 1378 even over the next 3 to 5 months. And so that remains in effect. 1139.5 is a floor of support that, if tested over the next few weeks, can absorb selling into spring trade, into summer trade, and above which we should continue up into the 1370s in the months ahead, where this area, let's say if it's tested in the spring, can contain buying into possibly through summer trade, possibly a 2021 high. Downside, if we close the week Friday below 1139.5, the market sells off probably pretty aggressively within about 2 to 3 weeks down to 1067 even. Now, I've been mentioning that if we close below 1139.5 at the end of any week, this market can fall all the way back into the 930s over the following several months. And while that may be true, what I'm saying now is we are bullish into spring above 1139.5. And we turn bearish into later winter, into spring below 1067 even. If we close below 1139.5, I think that's near-term weakness only. 2 to 3, 3 to 5 weeks until we test 1067 even. This 1067 even is a 1/3 ascending speed line, trend defining, that if tested between now and the end of January, can absorb selling through winter trade, possibly into spring. And from here, the market could actually push on to new highs within months of testing 1067 even. So that's why I say I don't really want to get aggressively bearish, be aggressively bearish until we close below 1067 even. And by that I mean aggressively bearish on a longer term basis. Everything I'm doing here is longer term in scope. My daily letters in each of these markets covers the day, covers the next 3 to 5 days, covers the next several weeks, and covers several months and beyond. And what you're seeing here is just the time frame several months and beyond. If you're interested, if you trade near term, if you trade the day, if you trade the week, if you trade several weeks out, I really think you should take a look at my newsletter analysis because it might be something that fits quite well in your trading strategy. Finally, let's take a look at the live cattle. This is a weekly continuation chart, volume-based rollover, presently reflects the February 21 contract. Now, you don't see it here. I've had it on previous charts, but back in late July, we had a long-term buy signal above a long-term speed line. I'm not even going to go into that where that speed line is right now, but I just want to say that since late July, I've had a buy signal long-term expecting the 122 handle. Initially, it was a 2 to 3 month target. And we've been sort of trapped in this sort of two-sided framework now for several months. But just, I just want to emphasize the fact that I am still bullish into later winter above 102.80 to 103.20. That area, if tested over the next month or two, can absorb selling through winter into spring, and I'm still expecting 122.65 over the next, I'm going to say 3 to 5 months above 102.80. 122.65 is long-term resistance, and in fact, recent activity, if you take a look at the weekly chart nearer term, this 112.62 formation, I mentioned this in last week's show at 112.72. We did close above it. Not by the 1% margin that I like to see for technical clarity, but we did nonetheless close above it. And as long as we close above it this week, and ideally close higher on the week, we should actually reach this 122.65 target over the next 3 to 5 weeks, by the end of January at the longest. 122.65 is a formation that can contain buying into spring, even summer of next year. Now, if we close below 112.62 at the end of this week, the market is susceptible. It's not a sell signal per se, but just know that I don't think you should be long into January trade if we close the week below 112.62, because I think the market then becomes susceptible, and I might even say highly susceptible, to falling back into this 102.80 to 103.20 area within about 3 to 5 weeks, where the broader live cattle market can bottom out once again through winter trade. And I think that's about all that needs to be covered in this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.